performing stock in the 90s, and it's taken 30 years for it, 25 to 30 years to kind of regain some of that.
But the 90s
stuff.
are back, Paul, so this is in tune with that.
And my boy Frank Urie's the chairman of the board there, and he's doing an awesome job. So that's good for them. What else you got for us?
Got JetBlue. So we should just say that the airlines in general are having a really good day, and that's because we're seeing oil pull back really dramatically, because this, of course, goes into the making of jet fuel, which is one of the carrier's largest costs. So having said that, JetBlue is also rallying because it got a nice upgrade today from Seaport Research to buy from neutral. And JetBlue is seen as a beneficiary of the problems Spirit Airlines is having. Because Spirit is now saying that it might have to shut down its operations within days if jet fuel prices don't come down, which it'll be interesting to see if they change that now that we're seeing oil slide the way it is today and whether or not that lasts.
Pretty elevated compared to where it was before this whole war began. And Spirit Aviation has been, this is the second bankruptcy it's in. It's had a lot to work
First one
with
I
here.
think was during COVID, so you're right. And also JetBlue, good news for folks in Boston. They just expanded service now. They're going to do direct flights from Boston to Barcelona during the seasonal time, the summer season. And I love this. They say the summer seasonal time ends October 25th.
Really?
So, yeah, the season's pretty long. So yeah, JetBlue is having a good day today. And then my last one I got for you guys today is Allbirds. This is the shoemaker.
Former shoemaker at this point.
Yeah, that's right.
And I remember, Scarlett, you actually came into the studio before the show that day and said, "Did you guys hear about the shoe company that became an artificial intelligence company?"
Yeah.
And we went, "Okay." So Allbirds shares, they have had such a swing this week. So they rose like 7-fold on Wednesday when they announced they weren't going to be a shoe company anymore, and they were going to stop making those wool sneakers and start doing AI in a big way. And then the market had a night to sleep on it, and the stock fell 35% yesterday. But we've got shares of Bird. Let me see. I think they're off their best levels of the day right now. I'm just taking a look at what they're doing. Yeah, they're up. About 12% right now.
Very good.
Still double-digit gain, but yeah, it's nothing. The 582% surge that we saw earlier this week when it pivoted.
I mean, it's sort of
from
like a meme
sneakers.
stock now, right?
I think so.
Bird.
Yeah. All right,
Bird
Alexis.
is the ticker symbol there, by the way.
All right, Alexis, thank you so much. We appreciate that. For more conversations like this, subscribe to our Stock Movers Report. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, and anywhere you listen. When I was in a training program at Painwebber back in the early 80s, I spent a couple of weeks with the oil traders, and I walked away thinking, I will never do that for a living. You just get killed, and you have no idea why. It's like one of the hardest things to trade, I think. And sure enough, we talked to a guest who's traded this stuff. Mike McGlone, Senior Commodity Strategist for Bloomberg Intelligence. Mike, who's buying and selling this stuff on a day when WTI crude oil is down 13%? What's going on out there?
Well, Paul, I like how you led into that. And you can't see me on radio, but I used to have hair. And you have nice hair. That's partly from being a trader. But it's the lessons of, I like you bring out, of landman kicked in. Prices went too high. And it's the #1 bull market in all commodities. It's elasticity. Now, we saw that natural gas earlier in the year was up 100%, up to 7. Now it's down below 3, around 2, down almost 20%. It's just tell us what's going to happen in crude oil. Now, there's a good reason for prices to go up, but now they're reverting backwards, and what it's doing is it's really, what crude oil does, it breaks things. It's bringing on that supply, cutting demand, and it's hurting the global economy. So right now, what I view is markets all work in cycles. We had an incomplete low price cure. Crude oil is hovering around $55 a barrel. The U.S. break-even costs got up to 100. I think by the time we get the midterms, it's going to get back down to around 55 or 50 or lower a barrel, because that's what it normally does. And it's the most unique thing I've ever seen in markets. We have the leader of the world's most significant energy producer and a net exporter of crude oil and natural gas. He wants lower prices by midterms, and inflation is the key theme. What do you think is going to happen? I think it's going to continue going lower.
You've been saying that. Mike's been saying that.
He's
day
been very
one.
consistent with that. Having said that, Mike, you got the prices that we see on our Bloomberg terminal, WTI at $82, Brent at $87. But for countries in Asia that import their oil, the physical price of oil has not moved as quickly, and they are struggling. They have shortages. They're looking at cutting back on production, maybe even rationing. Some school days are being cut to 4 days a week because they need to conserve energy. When does the physical market catch up?
Yeah, that's going to be a while, Scarlett, because I hear it at minimum takes 6 weeks to get oil to its destination out of the Gulf. And the key thing is you nail it. The rest of the world's really suffering, particularly Asia, maybe not China, because China really built up its reserves, but a lot of the other countries in Europe, I mean, jet fuel spiking, distillate spiking, gas oil spiking, bunker fuel, and that's going to just crush those capital investment decisions, crush those economies. At the same time, they're facing that paradigm shift. They just can't export to the U.S. as much as they were, particularly China. You've seen the major exports of EVs from China to the rest of the world. So what's the big picture here is it's going to shift that process of technology replacing fossil fuels. In the meantime, can we get through this without a global recession? I doubt it. And the number one measure for that is that U.S. stock market. Right now, it doesn't care.
It doesn't care. What's the demand situation look out there for crude oil these days, Mike?
It's been, well, the key theme is in the U.S., we have a major surplus of supply versus demand. We mentioned that before. It's running 8 million barrels a day. It's all about China. And their demand has been flat and actually declining around 11 million a day. It peaked in 2020. And they built up reserves to very high levels. And they're building up supply of everything. They're just adopting the technology that the U.S. did in the oil patch during the Obama administration. So the whole picture for crude oil is it's being replaced by fossil fuels. You sell it when it goes up. It's typical cycles. It has to get around 40 for a low price cure. So demand is going to get hurt by this. It might take a while. In the shorter term, it's going to be really hurt, as you mentioned, the issues in Asia.
All right, Mike, really appreciate your joining us. Mike McGlone is our senior commodity strategist here at Bloomberg Intelligence, joining us to talk about oil. Again, WTI and Brent, both lower by double-digit percentages. We're looking at $82 a barrel for WTI here in the U.S. All right, let's talk about AI, because AI is one of the big tailwinds for the stock market, which right now is in rally mode. The S&P 500 up 1.2%. We're looking at a third day of record highs if we close at these levels. The NASDAQ 100 also getting ready to set another record high. Ranjitha Kumar is chief scientist at User Testing, and will talk to us a little bit about what they're doing over in Chicago with AI. Ranjitha, welcome to the program.
Hi, thanks for having me.
So tell us a little bit about your company, User Testing, where you are chief scientist. What does the company do, and how does it work?
Yeah, so User Testing is a human insights platform that helps companies understand how people experience their brands, products, and services. So it could be your website, your mobile app, your prototypes, or even end-to-end journeys like ordering online and picking up in a store.
So typically, what are you looking to find out from, one of your clients' client base?
Yeah, so if you're one of our customers, typically what you do is you use our platform to run tests. You can recruit participants for this test from, our own proprietary network, which actually has over 6 million people that we've vetted globally, or you can bring in your own customers. And while these participants take the tests, they're giving us all sorts of interesting data through, what they're doing on their screens, their think aloud feedback, survey responses, even, their facial expressions. So at User Testing, we then take all of that data, and our platform uses AI to translate those into actionable insights. And, then you're off to the races from there.
Right, and the actual insights is what these companies really are seeking as they try to become more productive, more efficient. When it comes to AI, there's a lot of buzz around agentic AI, this idea that AI can kind of take off and do a lot of the analysis, not just answer your questions. How do you define agentic AI in a practical business sense?
Yeah, that's a great question. I like to think of agentic loops as iterative workflows where you use LLMs to perform different roles. So for example, you might first ask an LLM to create a plan for completing a task, and then you ask it to execute that plan. And then afterwards, the LLM can actually evaluate its own performance and determine whether or not the result is good enough or needs improvement. And, if it's not good enough, you can tell the system, loop back and try again. So you can basically keep going in these iterative loops, and it's kind of cool because they're flexibly autonomous. That's kind of how I like to describe them, because at the end of the day, a human can decide where they're going to intervene and review what the AI did and guide the agent's work.
So, Rajita, we know that executives are under pressure to move quickly on AI, to adapt AI to their business. What are the biggest mistakes you're seeing in that rush?
Yeah, I think my pet peeve right now is a lot of people would like to sprinkle AI fairy dust on existing workflows. And I think what you want to do is take a step back and be very intentional about how you're creating new AI workflows and how you're bringing AI to the market. So I do think speed is important and experimentation is important, but I think my advice would be very intentional about how you're using the AI, and make sure you're applying it in the right places to solve real problems.
And of course, as we think about AI kind of taking over a lot of the rote work that we do day in and day out, there is still a real role, a real need for human judgment. How are you thinking about why human judgment, real customer insight still matter in an increasingly AI-driven world?
That's a great question. I think there's no substitute for human judgment, human expertise, human insight, and frankly, customer insight, right? Because our customers are still people, not these AIs or models. And so you have to, use AI to speed up the work that AI is good at doing. But at the end of the day, it is human judgment, expertise, experience that matters. And you want to make sure that you're not completely automating stuff at the risk of losing that.
All right, well said. Ranjita, thank you so much for joining us today. Ranjita Kumar is Chief Scientist over at User Testing. Their ticker is USER. Thank you. All right, we're looking at markets heading into the weekend on a big tailwind. In fact, the S&P 500 has now gained every single day this week and is on course to close out its third straight week of gains with gains of at least 3%. So what
While
a
at an
turnaround.
all-time high. So that's,
Yes.
yeah, it's amazing that while setting all-time highs, still moving higher by 3% each week.
And the NASDAQ 100,
Yeah.
for those keeping score, now higher for a 13th straight day as well. Also a record high. Get the latest. News whenever you want it with Bloomberg News Now. Top stories from a global team of reporters available at the click of a button. Get Bloomberg News Now on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts. We're ending the week with gains in equities and losses in oil. The S&P 500 at a record high, the NASDAQ 100 at a record high, WTI and Brent, both global benchmarks, and the U.S. benchmark losing about 11 to 13% in their prices.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. Wall Street on track for yet another winning week. We are off session highs right now, but the Dow, the S&P, NASDAQ solidly in the green. Just getting a headline on the Bloomberg right now. Iran's semi-official Fars news agency says the passage via the Strait of Hormuz will be closed if the U.S. naval blockade continues, as it would be considered a violation of the ceasefire. But right now, the Dow, the S&P, NASDAQ all advancing. Equities climbed after Iran announced that the Strait of Hormuz is, quote, completely open for commercial traffic. Oil is plunging. S&P right now up 85 at 71.26. That is a gain now of 1.2%. Dow Industrials up 950, up 2%. We've got NASDAQ up 363 now, up by 1.5%. The 10-year at 4.23% with a VIX just above 17. The 2-year 3.69%. Spot gold up $76 the ounce, 48.66, up 1.6%. And as we head into the weekend, West Texas Intermediate crude with an $82 handle. You recall this time yesterday we were in the 90s. WTI right now 82.94. It is down by 12.5%. Barrel of Brent, the global benchmark 88.77. Down now by just about 10.2%. Intel up 2.3%, trading at their highest intraday level since 2000, as optimism continues to grow that the chipmaker's ambitious turnaround plan is bearing fruit. So recapping a major sell-off in crude, WTI down 12.4%, 82.96 a barrel. The VIX just above 17. The S&P, NASDAQ 100 index all trading at records. Paul and Scarlett, that is a Bloomberg Business Flash.
Now on Bloomberg Intelligence, Munis in Focus.
All right, Focus on Munis is brought to you by BAM Mutual. Put America's strength to work in your portfolio with BAM insured municipal bonds. Protect your investments with an added layer of security and guaranteed income. Invest with strength. Build a stronger tomorrow with BAM Mutual. Well, just a few weeks ago, the city of New York, I think, did a $1.9 billion general obligation bond. And if you were a resident of New York City and you bought that bond that day, you got a tax equivalent yield of 10.1%.
Juicy.
Yes, for a extraordinarily highly rated credit. That's not bad. That's a power tax-free. Our next guest knows all about that. Nisha Patel, SMA fixed income portfolio manager at Parametric. Nisha, talk to us about the municipal bond market. How's it performing this year?
Yes, great to be here. So I think, to your point, Paul, taxes are very top of mind as investors have just come out of tax day. So what we've seen so far this year, last year was a tough year in terms of performance, rate volatility, technical, higher technicals, higher supply was a story. We had a rebound earlier this year, and then March was actually the worst month of performance for the municipal bond market in the investment grade space in roughly about 3 years. So what we saw in March was a classic rate volatility, right? Macro story plus technicals. What do I mean by that? Again, higher supply, a little bit of selling due to tax time selling, and then you layer that with all the rate volatility in treasuries that we've seen because of the war. Since then, though, good news has been two things. We've seen a rebound in April, but even with that rebound in performance, we are still seeing kind of the current entry point as being very attractive. So, tax-free yield still roughly 3 to 4%. And to your point, Paul, depending on which state you're in, that can be a very, juicy, very attractive tax equivalent yield that investors can take in a market that is still relatively high grade, right? High quality from a credit perspective.
So it might be tempting for people to start buying some munis after this brutal sell-off in the month of March. But I guess the question is, you could also wait, and if valuations are low and things look cheap, it could always get cheaper.
Yes, I think that's a great point. It could. And again, we've seen a little bit of a rebound in performance. So yields have come down a little bit, particularly in the intermediate part of the curve where we're seeing a lot more demand. But I think, the main thing here is that, look, yields could stay a little bit higher for longer. A little bit of this is going to be dependent on where treasury yields are. But seasonality has a lot to do with this in the municipal bond market too. So we talk about supply a lot. We're still seeing, a very high amount of supply. It tends to be very much kind of focused in certain pockets of the year from a calendar perspective. So usually as we head into the summer, we have more favorable technicals. So what does that mean? Supply, typically moderates a little bit. You have a lot of the issuance come up in the first kind of half of the year. And then demand usually naturally goes up because you have a lot of maturities and coupons that need to come back into the market to be reinvested. So you're right. I think from a timing perspective, it can be very tricky. But I think if we look at, treasuries and we're thinking, look, we're stabilizing here. We've seen a lot of kind of the worst of it, if you will, in the municipal bond market. And if we're seeing an outlook for stronger technicals, I would argue at least legging in here at this point is probably the prudent way to do it and very opportunistic right now.
Nisha, you were talking about supply, and from what we understand, 24 was a record year for issuance. 25, another record year for issuance. Is 26 going to be another record year for issuance? And if so, does that put a headwind to performance?
Yes. So yes, we've been hearing, I've been talking a lot of supply. So few things to keep in mind, I think, just from a backdrop, right? So issuers have kind of a pent-up demand and pipeline of real projects to fund. So, utility, housing, any sort of infrastructure-related project in this country typically is going to be financed in the municipal bond market. As costs are higher, right, as we see kind of broadly across the board at household level and in every other sector, the dollar amounts of these deals are going to be bigger as well. And I also think it's very tough for issuers to time. But if they're seeing this as a generally attractive market from a financing perspective, they're going to come out to the market. So to answer your question, 2026 is also expected to be still as high as 2025, which was a record year, right? That can fluctuate, but generally the theme is higher supply. What will be different, though, and why we think this year higher supply does not equate to underperformance necessarily, is because in 2025, the demand was not there, right? So all the rate volatility because of Liberation Day, think about money market funds, what those were yielding, even just rolling treasury bills. That's where a lot of clients were parked, right? They didn't want to take on a lot of interest rate risk. This year, we could see this different, right? We do have money market fund yields lower, reinvestment risk higher. So we could see just higher demand given the yields that we're seeing in the market today.
Nisha Patel, SMA Fixed Income Portfolio Manager at Parametric. Thank you so much for our Munis in Focus. It is Friday, which means later on this evening, we have Bloomberg Wall Street Week airing. And the host, one David Weston, is with us in the radio studio. Hi, David.
Hi. Great to see you, Scarlett.
Great to see you,
Paul.
too. You got a chance to talk with the former Treasury Secretary, Hank Paulson.
Yeah.
How did that go? I'm sure he has a lot to say given the kind of historic moves we're seeing across markets and big questions about geopolitics and what the Fed does next. I mean, there's no shortage of topics.
Yeah, well, we used the occasion of the IMF World Bank meetings to go down to Washington because he was there to talk about that. And he talked about exactly what you mentioned, Scarlett. A lot of it was about the war in Iran and what that means for the global economy, what it means for the global financial leaders who were meeting there. And of course, he wanted to talk about China some because he thinks that's terribly important for the U.S. and China to figure out how to work with each other since they're the two largest economies. And so much of the discussion was about that. Hank, as you know, for many years has been concerned about the U.S. deficit. And although he was not at all suggesting that the war made that worse, in fact, he thinks in many ways the United States is better positioned than other people are, he is concerned that at some point, he doesn't know when, we're going to hit a wall that's going to be a real problem. This is part of what I had to say about that.
This crisis is different, right? When you hit the wall and you're trying to issue treasuries and the Fed is the only buyer and the prices of the treasuries are going down and interest rates are up, that's a dangerous thing. When are you going to hit the wall? I obviously don't know. It's impossible to know. But the law of economic gravity, you're not going to know that. So, and when we hit it, it will be vicious. So we have to prepare for that eventuality. And I think we need an emergency break the glass plan.
So that is Hank Paulson. And the crisis he mentioned was not war in Iran. It was not Ukraine. It was the larger crisis down the road at some point, the fiscal crisis he's been warning about. Actually, I went back and reread some of his book, On the Brink. And the reason he took the Treasury job originally in 2007 was because he was concerned about the fiscal crisis in 2007.
I know. Well, I've been on global Wall Street since 1986, and it's been a story since 1986. And I'm sure it's well before that as well. But it just, but the cynics will come back to me, Dave, and say, hey, as long as people show up to the Fed and buy our bonds, we're fine. Yeah. Boy, I guess that's okay, but I don't know.
Yeah, as long as in that sentence is the one that worries me. Because Frank is, I'm sure Hank would exactly agree with that. But he'd say that's the as long as. But at some point, if it goes too far, they won't. And by that point, you're really in trouble. And part of the problem is the break the glass plan that he says we need to do. He can't really say we're any close to having that today than we were in 2007 when he was in Treasury. So he's very concerned about it down the road.
Yeah, this flares up every once in a while. Remember earlier this year when we had the Sell America trade, people were worried that we're going to start to see a buyer strike of U.S. Treasuries. That doesn't usually pan out. Maybe for a while you start to see other central banks diversify away from the United States, maybe buy some other kinds of assets. But it's not as if central banks in other countries are saying full out, I don't want to have anything to do with these U.S. assets.
And it's a political thing, isn't it, David? I mean, there's just not the political will in this country.
Well, Hank says that actually in the interview. He says Congress, he's been around Washington for a amount of time. Congress, Democrats and Republicans don't do anything until there's a crisis. You know, and that's the problem. And that's why he's saying that at some point there will be a crisis. That's why we need a plan on the shelf that we can pull off the shelf. Do something like that. Did you see the Deutsche Bank note actually a couple of weeks ago that suggested that actually the petrodollar was under siege because of this war in Iran? And it actually, because as you know, China would love to move away from the dollar, right? And Saudi Arabia even had been moving away from that. So there's even a question about whether this might not do away with the dollar as the reserve currency, but undermine it a little bit because there have been nicks on it. Yeah, there have been holes being poked in it for a while now.
What is Hank Paulson doing these days?
He's got the Paulson Institute that he founded. He spends a lot of time with China and working on China and climate. Climate is a very big deal. Yeah. Oh, climate is a very big deal for him and Wendy, his wife. But one of the things we talked about that's going to be a different story is China's moving forward on renewables. Essentially, all energy China is generating for AI is coming from renewables. At the same time, the U.S. is cutting back on renewables, and he's concerned that we're really at a disadvantage in the AI race.
It seems like the rest of the world, the message to the rest from the rest of the world to the U.S. is, you guys in the U.S., you do what you want to do with renewables. But the rest of the world's moving forward.
Exactly.
And we're paying for it, right? Because Americans are also paying for higher energy bills because of the surge in demand for energy from those AI data centers.
Yeah, it's interesting. But the rest of the world is not waiting for the U.S. That's what we got from the Bloomberg Philanthropies Energy Conference, 6 months ago.
You're totally right about that. By the way, I think that's part of a larger phenomenon. Again, we talked to Hank about this. When we have the stresses and strains of the global economy right now, back in the great financial crisis, he helped bring the world together to accommodate. At this point, it's not just China and we are on the same page. We're not on the same page with Europe anymore or with Japan. And he said that's a real problem because we don't have a common approach to macroeconomics anymore.
Yeah, some might call it an America alone approach.
Yeah.
America alone. David Weston, thank you so much. We appreciate it. David Weston, he's the host of Bloomberg Wall Street Week. And for those of us of a certain vintage, Wall Street Week brand is extraordinarily valuable. I'm glad it's in the hands of David Weston and Bloomberg News. So we got that coming up here this evening. S&P, they're up 95 points. That's 1.3%. About that, the Nasdaq's up 1.7%. The Dow, I'm quoting it because I like the big numbers, up 980 points. That's it, Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. S&P 500 Index best level of the day. This Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. Right now, the S&P up 94, 7135. We're looking at a record on the S&P up by 1.3%. Again, any advance, any move higher today on both the S&P, NASDAQ, and NASDAQ 100 index will be a new record. Dow Industrials have been up more than 1,000, up 989 right now, up 2%. S&P keeping it all in context, up 1.3%. NASDAQ up 1.7%, and the NASDAQ 100 index now up by 1.4%. The VIX just above 17, the 10-year 4.23%. Gold at $48.70 the ounce, up 1.6%. And West Texas Intermediate crude oil, WTI down 12.4%. $82.95 a barrel on West Texas Intermediate crude. So the Dow, the S&P, NASDAQ are all advancing right now. Again, the S&P up by 1.3%. I'm Charlie Pellet, and that, Scarlett and Paul, is a Bloomberg Business Flash.
All right. Thank you so much, Charlie Pellet. It is Friday, and we are looking at gains in the stock market, big losses in the oil market. The S&P 500 at a record high for a third straight day. Ditto for the NASDAQ 100 as well. And we're now looking at indexes getting ready to close out a third straight week of gains of at least 3%. Sarah Ponczak is the first vice president of wealth management at UBS Private Wealth Management. She's also a friend of the network, having previously worked at Bloomberg as well. Sarah, always good to speak with you. And you note that the volatility, even with the gains that we're seeing in risky assets today, is not going to go away because really what's driving everything is geopolitics and headlines on geopolitics.
That's right. Thanks for having me, Scarlett. It's always great to see you and be back on Bloomberg. I was on the program about a month ago, and it was almost an entirely different picture. You know, geopolitics was very much front and center, as it still is, but it was just beginning. And there was a lot of tension between the United States and Iran, and the Strait was closed, and there were concerns about energy prices and oil. And we talked about how, yes, geopolitics is front and center and very important when it comes to volatility, but that's not necessarily what's going to drive market returns long term. That being said, just as you pointed out, Scarlett, sure, things are going very well today. Things are going very well this week as it pertains to diplomacy. But we all know that that can change on a dime. So I wouldn't yet say that we're out of the woods, that the volatility is behind us and that it's going to be a straight shoot higher. That's not the case. Volatility is the price of admission when you're an investor, and we expect volatility is very much going to continue. But that said, we're now in an earnings season that's going to highlight the fact that fundamentals of the stock market and profits are still very strong. And at the end of the day, that's truly what drives markets.
Sarah, within that equity call there, are there certain sectors that you guys like here? We have seen a little bit of rotation late last year out of some of the tech into some of the more value trade. That seems to maybe reversing a little bit here. How do you guys think about stock selection?
So we still very much like technology stocks, and we actually use some of the volatility that we saw over the last couple of months to add to those positions. With that said, this is not an all or nothing market solely driven by technology anymore. For years now, we've talked about the Magnificent Seven and a bunch of different acronyms and names that we came up for a select handful of stocks that were the only constituents of the market that were really bringing stocks higher. That's not the case anymore. So yes, we still like tech. We still believe that artificial intelligence has a long runway ahead of it. But technology is not the only sector that's going to benefit from that. So instead, you can also look to other areas of the market. And what's interesting is if you look at earnings expectations for the first quarter. Yes, that was the first 3 months of the year. We're beyond that, but now we're starting starting to see those numbers actually come through. Our chief investment office is expecting 17% year-over-year earnings growth for the S&P 500 as a whole, and that growth is broad-based. It's not only being driven by technology, it's being driven by other sectors as well, which is what we want to see. And by the way, that 17% year-over-year growth is the strongest pace since 2021. So again, fundamentals are strong. Companies are making a lot of money right now. We're about to see it most likely. And in addition to just moving out of sectors away from technology, we've also still been interested in international stocks, looking overseas. For over a decade, the U.S. was the only place to be. That changed last year. We still feel that has legs, and there's reason to diversify out of the United States as well. And then also looking to other asset classes if it makes sense for you as an investor too.
But if you don't want to take on the currency risk and you'd rather stay in the U.S. and feel that big caps have run their course, you could also go smaller when it comes to market cap, right? The Russell 2000, for instance, has outperformed the big caps, the S&P 500 and the NASDAQ so far this year, as well as over the past 6 months as well. What do the earnings picture look like for these smaller companies that tend to be more geared to the economy, certainly more dependent on lower interest rates, and also more dependent on a U.S. economy and U.S. domestic demand as opposed to global demand?
Right, you're absolutely right, Scarlett. As we've seen interest rates come down, we all know the Federal Reserve cut interest rates last year a few times. Now there's been some questions surrounding, are we going to see further interest rate cuts in 2026. Our economics department is still expecting that we could see about 50 basis points of cuts potentially, more so in the latter half of the year. So later in the year, but still as interest rates come down, a lot of small companies, those are the very companies that need to borrow because they're not cash heavy. They don't have a lot of cash on their balance sheets like some of these major mega caps do. So they need to borrow in order to fund their businesses and grow. So as interest rates come down, that very much helps small and mid cap companies because that debt burden that they're dealing with, the interest rate just isn't as high. So you're absolutely right. We've seen small mid caps perform well so far this year. And if interest rates do continue to come down, that's a trend that we could see continue.
Sarah, what's the fixed income conversation you're having with your clients these days?
So, it's interesting. I think there was a lot of, not hype, there's never hype around bonds, I would say, but there was some excitement around bonds, entering 2025, as we all knew that interest rates were going to come down. So at that point in time, the story was, okay, if you are a bond investor, you want to be locking in interest rates now because they're the highest that they've been in years. So lock in these interest rates. And also, by the way, when interest rates move lower, that means that your bonds are going to appreciate in value. And that's exactly what we've seen over the past, 2 years or so. It's been a great environment for bond investors. I would say some of that luster has gone away a little bit. There isn't as much, excitement surrounding bonds, but we always, we're still reminding our income-oriented clients, those who are retired, they need income in their portfolio. They also need stability. We have to remind everyone that if you look at the stock market over the last 3 years, it's up over 60%. Yes, there's still a lot of reason to be optimistic, but if you're someone who's spending down your portfolio or you need income, bonds are still a great place to be. And especially after the run-up in yields that we saw over the, from the start of the year, it might be a good time to lock in yields again.
Sarah, very quickly before we let you go, how concerned are your clients about what they're hearing? And I say hearing because there's usually headlines about private credit.
Great question. It feels like we're fielding questions about private credit almost every day. Because look, we do believe that private credit is a good place to be in a portfolio. No, you don't want to be over allocated to it. Yes, it is an illiquid asset class. You might have been sold the story that you have quarterly liquidity, but that's only up to a gate, which a lot of investors, as you know, are learning right now. So, we've been in contact with a lot of the private credit issuers. To date, it still sounds like the loans are performing really well. They're optimistic on the underlying investments, but you still have to be selective as it relates to the issuer. So for some of those larger issuers that we work with, we're still very comfortable being invested in those portfolios. But I know that there are a lot of, smaller issuers out there. We're not involved with them, where there are maybe some concerns about loans, but more so than not, we do feel at this point in time, a lot of it is headlines.
All right, good stuff. Sarah, always a pleasure speaking with you. Sarah Ponczak is First Vice President of Wealth Management at UBS Private Wealth Management. Senior Vice President. I'm sorry, we did not promote her.
Promoted again.
Oh, there
That's
you
how
go.
good she's doing.
Sarah Ponczak, one of our favorites here
Yes.
at Bloomberg. And as she was talking about it, now you have a market that is on fire at the moment. The S&P 500 at a record high, up 1.25%. The NASDAQ also gaining to a record high, up 1.5%. And this comes as oil prices decline. Iran basically saying that the Strait of Hormuz is open. And President Trump just now saying that Iran has agreed to an unlimited suspension of the nuclear program. We'll have more details as we get them. But that is the latest headline here on Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well, so check us out there. Lots of M&A out there. Question is, what can get, I guess, past the regulators? And we have an administration here that M&A bankers, M&A lawyers felt like they can get a lot done in this environment, and we'll see here. But there's a lot of cases that the regulators are going to have to deal with here, and who better to do that? Look us up is Jennifer Reed, Senior Litigation Analyst for Bloomberg Intelligence. Jen, let's just talk about the one that popped up this week, and I was involved with as a banker back in the day. Live Nation Ticketmaster. Everybody's out there feels like our ticket prices are way too high. There's way too many fees, and what's going on out there?
Yeah, well, you know, it's a perfect example of what's happening in this administration because the Department of Justice has been pursuing that company for years. I mean, they had a settlement when you were involved, right? When they acquired Ticketmaster, they violated that settlement. They were found to be in violation. They entered a new settlement. And now still, we've had a trial. The Department of Justice had sued. The Department of Justice wasn't part of that trial because they settled the case in the first week with Live Nation. It was a pretty big surprise to a lot of people, but apparently it's been reported that there were lobbyists hired that influenced the administration and got a pretty good settlement for Live Nation out of it. But we have states that also enforce the antitrust laws. They can enforce the exact same laws the Department of Justice can, and they continued, most of them, a few settled, but most of them continued to pursue Live Nation, and they won a liability verdict from a jury that Live Nation has monopolized certain aspects of the live concert industry.
So put it all together, what does that likely mean for Paul Sweeney when he wants to buy tickets to a summer festival next year?
Well, let's just hope it means that those tickets are a little easier to get and less expensive. Probably not by next year, though. These things take a really long time, and it's highly likely that once the judge issues his remedy, which could take another 6 months, that Live Nation will then appeal that. And usually a remedy, particularly if it's fairly intrusive, it will be stayed pending the appeal, which means nothing's going to change. So when Paul buys his tickets next year, he's still going to face a lot of fees. And until this gets through the appeals process, possibly even get all the way through to the Supreme Court.
What happens with the ticket resellers, those other companies out there, Access, I'm thinking StubHub, did they have a role in all of this?
You know, they do, because several of them have really been trying to get into what we call the primary ticketing market, not reselling, but being hired by the venue to sell the tickets for the concert in the first hand. And they've really struggled because Live Nation has such a stranglehold. So right now they're watching and waiting, hoping that whatever this remedy is that the judge imposes will open up competition and allow them to gain a little more market share, get a few more contracts with some venues, and sell more primary tickets.
All right, let me just get to some Iran news here. President Trump said Iran agreed to suspend its nuclear program indefinitely and will not receive any frozen funds from the U.S. Trump said in a phone interview on Friday that a deal to end the war, which the U.S. and Israel began with Iran in late February, is mostly complete. Talks over a lasting agreement will, quote, probably be held this weekend, the president said. Bloomberg Balance of Power with Joe Matthew will bring you all of the details in just a few minutes. Jen, let me get to another deal that's near and dear to my heart, which is Paramount Skydance.
Yes.
Acquiring Warner Brothers Discovery. Mega deal in the media space. What are the regulators going to say about this?
Well, in the U.S., they've already spoken, and they said, we're fine with it.
Nice.
Yeah, I mean, the Department of Justice allowed the Hart-Scott-Rodino waiting period. That's the period the companies have to wait before they can close to allow for antitrust review. They allowed it to expire. Now, I've seen news that some subpoenas were sent out since then. I don't really think that means much, because in the U.S. right now, legally, the companies can close. Cool. The reason they haven't is because they're waiting for Europe and UK, which also have jurisdiction to review the deal, and they cannot close until they get that. But I'm not so sure that the European regulators are going to have much of an issue with this, because the impact is more on the U.S. in terms of labor and putting together those movie studios.
But we know that there's a lot of opposition, especially in the Hollywood creative community, to this deal. In fact, more than 1,000 Hollywood actors, screenwriters have written this letter of opposition, really pointing out the harm that it will do. The goal, according to these folks, is to get state attorneys general to stand up and oppose this deal. Does that have any legs to it?
Absolutely. The states, as I said, can enforce the same antitrust laws as the Department of Justice. And they've been talking for several years now about stepping in. If the new Trump administration was lax on antitrust enforcement, they would step in and pick up the mantle and run with it. And we're seeing that they've done that. They have a lawsuit right now pending against the Nexstar Tegna deal, which was also cleared already by the FCC and the Department of Justice. And if they get enough pressure, if there's enough consumer concern about the Paramount deal, I could see the states bringing a lawsuit, and they have a shot.
30 seconds, Jen. There was a story recently, United and American Airlines getting together. No way.
I think no way. Textbook anti-competitive. Of course, I said that about Sprint and T-Mobile, and that deal got done. I think that it's just posturing. I don't really see that deal coming together. I think even if there's lobbying to the Trump administration, I don't know how the Department of Transportation or the Department of Justice clears that deal without massive divestitures, and I don't even know if that's feasible.
I mean, JetBlue and Spirit weren't allowed to get together, and I know that was under a different administration. If you put together American and United, that becomes the biggest airline in the U.S.
By a lot.
Yeah, just extraordinary. So there's a lot of deal flow out there, and so for the M&A bankers that were expecting this administration to be supportive, that was a pretty good assumption.
You know who's at the top of the league table?
Who?
Goldman Sachs.
Oh, of course.
Same as last year.
Exactly,
Of course.
Exactly. All right, Jen, thank you so much. Jen looks at the legal league table.
There you go.
Exactly.
All right, more on that later on.
All right, Jen Reese, Senior Litigation Analyst with Bloomberg Intelligence. Appreciate getting a few minutes of our time. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment. Balance of Power with Joe Matthew. Boy, are they going to have a jammed. I just said rip up the script, Joe, and just bring us
Pretty
the latest.
much. The gains in equities are just piling on right now. The S&P 500 now up 4.6% so far this week. It's third straight week of gains of at least 3% on a weekly basis.
Just extraordinary. We're going to have more coming up for you. This is Bloomberg.
This is CBS News on the Hour, your home for original reporting.
I'm Steve Kathan. Iran says as long as a ceasefire holds, the Strait of Hormuz will be open to commercial shipping. The news sent oil prices lower and stocks higher. CBS's Natalie Brand at the White House.
The president says the U.S. military blockade on Iranian ports in the Strait of Hormuz is not changing for now, will remain in effect until a deal is 100% reached. That's what he said in his initial post, applauding this news by Iran to open the strait to commercial ships.
And President Trump also indicated on social media the U.S. would help Iran remove undersea mines in the strait. It all comes as gas prices do drop a bit. AAA says the average price for a gallon of regular is now $4.08. A week ago, it was $4.15. CBS's Lana Zach is in Iowa City, Iowa.
There are a lot of people that I've spoken with that feel their patience has really run thin on this. And part of the problem is that they feel like this entanglement with Iran is something that hasn't been clearly explained to them as to why the United States needs to be involved.
There's news about the top-selling vehicle in the U.S., as we hear from reporter Jeff Gilbert of affiliate WWJ Detroit.
Ford is now recalling about 1.4 million 2015 through 17 F-150 pickups after driver reports of very sudden deceleration. The issue has been traced to an electrical connection that can wear down over time. Ford has had 444 warranty claims, and this has been connected to one crash and 2 injuries.
A Republican member of the House of Representatives is raising suspicions about a Democratic senator without revealing many details. Florida's Anna Paulina Luna told CBS News she wants an investigation into Ruben Gallego of New Mexico. CBS's Nicole Killian.
Congresswoman Luna says she has been in touch with Leader Thune's office. He told us the matter has been referred to the Senate Ethics Committee, but a spokesperson for Senator Gallego says he has not been notified or contacted by the panel.
And Gallego denies any of wrongdoing. CBS's Michael Wallace tells us about the woman President Trump has picked to lead the Centers for Disease Control.
Dr. Erica Schwartz is a Rear Admiral currently serving as the Coast Guard's Director of Health. She was a Deputy Surgeon General during Trump's first term. Schwartz has praised vaccines as a cornerstone of prevention. Her nomination is a sign the Trump administration is turning away from Health Secretary Robert F. Kennedy's vaccine skepticism ahead of the midterm elections. If the Senate confirms her, Schwartz would be the CDC's 4th leader in just over a year.
And checking Wall Street, right now the Dow Jones Industrial Average up more than 1,000 points. This is CBS News. A piece of Titanic history is up for sale.
Titanic was called the Ship of Dreams.
The life vest with 4 cork-filled pockets worn by Laura Mabel Francatelli, a first-class passenger on the Titanic, is being auctioned off in England. The 22-year-old survived after she and 11 others were rescued on a lifeboat that had the capacity to hold 40. The life jacket is still stained from that fateful April night in 1912. The vest had stayed with Francatelli's family for almost 100 years before it was acquired by a private collector. The opening bid will be $200,000. Auction watchers expect it'll sell for up to $500,000. Deborah Rodriguez, CBS News.
Air New Zealand plans to add triple-tier bunk beds for economy travelers on long flights beginning in November. Those pods will be on the Auckland to New York route. That's one of the world's longest commercial flights. Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
It's the day Wall Street was waiting for. Welcome to the Friday edition as markets rally on hopes for an end to the war with Iran. Bloomberg just got off the phone with President Trump a couple of minutes ago. He said Iran has agreed to suspend its nuclear program indefinitely and will not receive any frozen funds from the U.S. It's unclear if this is definitive, but oil prices are sharply lower. Stocks are moving higher. We're going to talk it out with Adam Ferrer in just a moment from Bloomberg Economics. Cliff Young from Ipsos will join with fresh polling data as the president continues his West Coast swing to promote tax cuts. And we'll have analysis this hour from our political panel as the news breaks before our eyes. Let's get to Wall Street right now and start with the markets. Charlie Pellet has his read from world headquarters in New York. Hey, Charlie.
Well, hello there, Joe Matthew. Best level of the day. That headline you just mentioned certainly bears repeating. President Trump says Iran has agreed to suspend its nuclear program indefinitely and won't be getting any frozen funds from the United States. All of this sending the Dow, the S&P, NASDAQ higher. Indeed, best level of the day on the S&P did see the Dow up by 1,100 points just a moment ago. Right now, the Dow is up 1,085, higher by 2.2%. S&P up 96 now, again, best level, up by 1.4%. NASDAQ up 384, up 1.6%. And the NASDAQ 100 index up by 1.3%. Bottom line here, looking at records for the S&P, NASDAQ, and the NASDAQ 100 index. All of this with the VIX above 17, just above 17 right now. The 10-year, 4.23%. The 2-year, 3.68%. Gold is up $78 the ounce to $48.67, up by 1.6%. Crude, the big story. This time yesterday, we were talking about $90 plus oil. Right now, West Texas Intermediate crude, $83.16 a barrel. WTI plunging 12.2%. Barrel of Brent at 89 even. Brent crude down by 10.4%. Amos Hochstein is managing partner at TCW Global and a former White House senior advisor under President Biden. And on surveillance this morning, he told us President Trump does want to see continued stock market gains, all a part of his Iran strategy.
I actually think as the President of the United States, he's managing a crisis. And if the markets are down, his window is narrower and his capability and his capacities and capability is narrower. So, and the Iranians get leverage. So he's doing everything he can to keep the markets up, and that's why for 4 weeks straight he has said we're probably done in the next few days.
And you can hear more of the conversation with Amos Hochstein on the Surveillance podcast. You can download it wherever you get your podcasts. We've got Netflix shares plunging on a day when the rest of the market is surging. Netflix after earnings down now by 9%. Again, West Texas Intermediate crude $82.94 a barrel, down 12.4%. Oil majors selling off as well. Case in point, ExxonMobil down 5.2%. Chevron down 4.1%. ConocoPhillips down by 6.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And that, Joe Matthew, lots going on, is a Bloomberg Business Flash.
That was quite a report. Charlie Pellet, thank you so much. We're going to stay close to Charlie today because this is one of those days that we will likely remember in the markets, and he'll be back in about 15 minutes, even less, with another update here. We're at our highs of the session. Did you hear everything Charlie just said? This is wild. S&P 7,000 seemed like a distant memory just a couple of days ago. We're at 7139. VIX is 17, even Bitcoin's moving higher with $82 a barrel oil. We were at 92 yesterday on hopes that something like this might develop. We were, of course, above $100 last week. Thanks for being with us on the Friday edition. You picked a good one to join us here on Bloomberg Radio. We're streaming live on YouTube right now. Search Bloomberg Business News Live. Keep us on the satellite radio at channel 121 or, of course, on the Bloomberg Business app. This is the moment the market has been waiting for. And I could sit here and just read the Truth Social posts. There have been, I just counted 13 of them since 8:30 this morning. Actually, 8:12 was when the president started posting about Tucker Carlson and his IQ. The topic changed pretty quickly. By 9:06 a.m., Iran has just announced the Strait of Iran, as he called it, is fully open and ready for full passage. Thank you. That's when things started to move. Then he moved on to the dust, as he likes to call it. The USA will get all nuclear dust created by our great B-2 bombers. I could keep going on here. It's been a bit scattered, but the fact of the matter is we just got him on the phone. Bloomberg News just spoke with Donald Trump right before the beginning of the show. And so I'm going to stick to that script right now because it's difficult to know exactly what's going on in the Middle East at the moment. He did say to Bloomberg News, and this is why we're at new highs, that Iran has agreed to suspend its nuclear program indefinitely and will not receive any frozen funds from the United States. A deal to end the war is mostly complete, he said. Talks over a lasting agreement will probably be held this weekend. Probably. We had heard reporting of a potential meeting on Sunday in Islamabad. And he said he's not decided who would lead a U.S. delegation for talks with Iranian officials to sign an agreement. Strange. I thought that was already assigned to J.D. Vance. I don't know. He says, I may. When he was asked if he'd go to Pakistan, yeah, I may. That would be a moment, too. So where are we in sports? Because we're waiting to hear from Iran, not just the president, a day after a ceasefire was declared between Israel and Lebanon. This is important stuff. The first call we made was to Adam Ferrer, senior geoeconomics analyst at Bloomberg Economics. Imagine trying to follow this and write a story. It's dated by the time you publish it. That's your world today when it comes to analysis. Adam, just give me your first read on whether you're believing what you're hearing, if this feels authentic.
So I think the first thing is that it's clear the president feels that the ball has moved forward, that the conversation has advanced to a point where he can get out in front of it.
Yeah.
And certainly it's not new that the president has sought to get out in front of deals.
That's right.
Right. And so on one hand, by the minute we're getting a little more clarity, but we're also, getting new questions as well, right? In what you just went through, we had real certainty on what Iran has and has not agreed to, but then a caveat that we don't even know when negotiations are coming and what the final deal will look like and who will even lead those negotiations and where the president will go to finalize the negotiations himself, which obviously another thing the president likes to do is get in the room and kind of push agreements through himself.
And he wants to own it and take a victory lap that as well, so might cross the ocean to do that.
That's right. But at the same time, again, I think we have to take a breath and think about what he has said and what questions remain, right? The president was most clear about this idea of Iran's highly enriched uranium, that, 400 kilograms whose disposition remains unknown. But, he insists that in whatever deal, the United States will be removing that and taking ownership of that. So that's consequential, given the United States' concern about Iran's ability to produce a weapon with that highly enriched uranium. The second big reveal is that Iran supposedly, according to the president, has agreed to suspend uranium enrichment indefinitely. Now that comes as a real surprise.
Huge.
Not only because Iran historically has made that a key red line for their negotiations and was obviously a key outcome of JCPOA was that they maintained an ability to enrich. But more importantly, in just the negotiations that we saw in Pakistan recently, supposedly the United States offered just a 20-year stop on those, not indefinite. So it's interesting that Iran would have agreed to something that was actually worse than the United States' starting position.
Although indefinite is not the same as permanent, right? Is this a way for Iran to wiggle out of something?
Potentially.
Yeah.
But again, we also haven't heard from Iran. But in the small bits that we have heard from Iran has already started to poke holes in parts of what the president has said. So the president said the Strait of Hormuz is open, but at the same time that the blockade will remain in effect. And Iran has clarified that from their perspective, if the blockade is in effect, the ceasefire is violated, and the strait is not open. So where do we stand at this moment? By our math, that means the strait is closed, and therefore oil's still restricted. We're still missing that 20%. Right. And, again, taking that breath and back, we were just talking before, the reality is that even if this really is all pointing to a conclusion in the coming days or week, the recovery of the oil market, the recovery of the region is not a question of days. It's maybe weeks, but more likely months and to the better part of a year or more, depending on what part of the market you're talking about. Yes. And we heard that from the Saudi finance minister yesterday here in D.C., cautioning everyone to not get ahead of themselves on the recovery.
So if that's the smart analysis, then you start wondering, well, what in the world? Brent's below 90, WTI is below $83. But that's a 13% drop for West Texas and a 10% drop for Brent. Everybody's trying to call the end of this thing and realize this could be volatile. The president last night, though, in Las Vegas, where, he was taking a victory lap on tax cuts, did get into this. And he said we were lucky that oil didn't go even higher. Here's how he put it.
I don't think so. I think we're going to be good. We always find a way. You got to find a way. But, sir, don't do it, sir. $300 a barrel. It's going to be a wild thing. It's going to be horrible. The depression is going to happen. Well, not going to happen because we just hit a brand new all-time high.
He's referring to the S&P 500, not oil at an all-time high. I don't know who was forecasting $300 a barrel, but is the idea of $150, if the market wakes up to the fact that it could be months or years before this is rationalized, still be plausible?
So I think our estimates right now from Bloomberg's side is that it would take a re-escalation in the conflict to see prices go down. That's not off the table, right? I mean, this remains a fragile situation.
We still have 10,000 troops en route.
That's right. And the president has made clear he has options to re-engage, and we see stories that the United States is still planning for what comes next, whether it be attacking energy infrastructure or other targets. And Iran has a lot of tools they can still use, and that could include leveraging their forces, their allies, the Houthis in Yemen, and threatening the flow of oil that has become so important in the Red Sea. But today's message certainly is one of optimism, but it does seem that the president is way in front, and as we heard from Amos Hochstein earlier, potentially trying to increase his leverage in this final stage of the talks by elevating the market, lowering the price of oil, and decreasing pressure on himself at this moment.
Fascinating. Trump just got off the phone with Axios now. Is he doing anything but taking calls from journalists? I mean, why have a news conference when you just get on the phone with everybody? This is fantastic. Telling Axios Iran meeting is likely over the weekend. Justin, if we can just have him call in and get rid of the middleman, that would help here. Sunday, Islamabad then is back in play? Or could we do this with a phone call?
It certainly seems like they will have to get in the room to hammer this out, considering the space that seems to exist with the Iranians.
Yeah.
But time will tell, right? The president seems very focused on ending this. And I think that is something that maybe markets are most attached to, is that whether or not the details are there, the president's intention is there. And that may mean that he is flexible and willing to find a way to land a deal. One point could be, as you said, the president said very explicitly, the United States will not be giving frozen funds to Iran.
That's right.
But the United States only has a very small portion of Iranian frozen funds, right? There's a large, better part of $100 billion in other places.
Yeah.
And, if it doesn't come from the U.S., maybe that's okay. Maybe the semantics matter here.
This will change by the time you're back to your desk. Let's keep talking about it. Adam Fair is the best at this. Bloomberg Economics, our senior geoeconomics analyst. And big hat tip to Kate Sullivan, our White House reporter, who got the boss on the phone. Cliff Young is on the way in next from Ipsos on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got stocks surging. In fact, right now, the S&P 500 index just about the best level of the day, on track for its best month since 2020, on hope for an end to the war. On the week, S&P 500 index looking at a gain of 4.7%. That would be the third weekly gain in a row, and the third weekly gain of more than 3.4%. Here's where we stand now. The S&P 500 index up 96. That is a gain of 1.4%. That is a record. Dow Industrials up 1,071, up 2.2%. NASDAQ also at a record, up 383, up by 1.6%. The NASDAQ 100 index, record there as well, up 1.3%. The 10-year, 4.22%, with the 2-year, 3.67%. The VIX just above 17. Spot gold at 48.71 the ounce, up 1.7%. And West Texas Intermediate crude plunging 12.4%, 82.91 a barrel on WTI. Brent 88.68. Barrel of Brent is down by 10.8%. We're keeping an eye on Intel shares, up 1.8% today at 69.71. Intel trading at their highest intraday level since 2000, as optimism continues to grow that the chipmaker's ambitious turnaround plan is bearing fruit. And just getting word that Air Canada is going to be suspending daily flights to John F. Kennedy International Airport in New York, citing soaring jet fuel costs. It will continue to fly to both LaGuardia and Newark. Again, recapping, S&P up 96, up 1.4%. The VIX at 17. 10-year, 4.22%. Energy, the big story. West Texas Intermediate crude, 82.95 a barrel, down by 12.4%. That, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie's working for the money today. I mean, you got a market like this. Actually, is kind of fun to tell the story on the air. We'll have more with Charlie in about 20 minutes time as we keep tabs on the markets here. But this is a powerful move. Always happens to coincide right around that lunchtime hour when the news breaks, the markets respond. That's why we have balance of power here on Bloomberg Radio and streaming live on YouTube. We're going to talk to Cliff Young in just a moment, so dial us up. Also, we're going to connect with Kate Sullivan. If she's calling the president, we're calling Kate. She's following him on the West Coast. He's out in Arizona today following the speech in Las Vegas last night. If you're just joining us, Kate Sullivan, a Bloomberg White House reporter, got Donald Trump on the phone earlier today, and it's a big reason why the markets have reached new highs since this rally started. He told us that Iran has agreed to suspend its nuclear program and will not get frozen funds from the U.S. Blammo, here we go. And of course, that follows the headline this morning that Iran, he says, has reopened the Strait of Hormuz, and it is pretty good timing, I guess, for a president who's trying to make the case about lower prices and the benefits of tax cuts, which are being obscured by $4 or maybe $5 a gallon gas, depending on where you live. You wouldn't have known that that was an issue last evening when he spoke to the crowd in Las Vegas. It was all about no tax on tips. And the president came with a message. Listen.
Thanks to our tax cuts this week, thousands of Nevada waiters, waitresses, casino dealers, bartenders, bellmen, barbers, caddies. So I love those caddies. They're very good if you have the right caddy. And valets receive the biggest tax refunds of their entire lives. And you see it. And I just want to say you're welcome. You're welcome.
Just came here to say you're welcome. And I guess he'll do that again tonight in Arizona. A couple of important swing states he's talking to about the most important issue, yes, the economy. Cliff Young's been running numbers on this and public opinion surrounding the war, rolling right through this whole experience, and it's great to have him back. And I'll tell you what, Cliff, first of all, happy Friday, good to see you. The headline on your polling deck before these developments today kind of still applies. Trump in a precarious holding pattern. So we don't know what's going to happen in the next couple of days. We don't know what Iran is actually thinking, and we don't know where gas prices and oil prices are going. This is a precarious moment indeed.
Well, it is indeed, and it was supposed to be a lazy Friday.
How about that?
And now it's not a lazy Friday. But the primary point is, when you look across all the polling data, Joe, I think the operative word is stability over the last month.
Yep.
Obviously, Trump took a hit. on his approval ratings. He lost about 3 points. Support for the war itself is stuck at a plurality, about 35%. Americans don't like it. They don't like its potential impact on the economy. They don't like increases in gas prices. So they're surly. But the numbers haven't changed over the last month. And one of the primary points we wanted to double down on is, while there was an impact of the war, especially when it comes to gas prices, public opinion has kind of baked it in. And we should expect, unless things change radically, it to sort of hover around where it is today.
Interesting. There is damage done. The president likes to talk about how prices will fall precipitously as soon as the war is over. Do polling numbers bounce back in the same way? If he can get gasoline back to where it was, is he good for the midterms?
Yeah, well, polls do go up and down, but for presidents, they tend to go in the long term down.
Wow,
right?
yeah.
Right. And I think we have to put it in proper perspective. Gas prices do have a negative impact on approval ratings. What we know is a 35% increase in gas prices, like today, have historically had about a 3-point impact on approval ratings.
Is that right? You can measure it that carefully?
Exactly. Yeah. Looking at the history of over the last, let's say, 70 years or so of polling, Donald Trump is right at the average. We also know that when gas prices go down, people are more optimistic and approval ratings go back up, but never to the point or the level of status quo ante.
Wow.
Usually they get at about 50%, 60% or so. So what goes down doesn't always go completely up.
Right.
And so, once again, the damage has been done from a political perspective in our mind.
Iran has had a negative impact on finances, which you presented to voters. Overall, this is more than half. 54% agreed with that statement. Interestingly, Democrats more than Republicans. Is that what drives a partisan angle on finances? Everyone's paying the same prices.
True. However, Republicans are also taking in consideration the security threat, the national security threat, the fact that Iran could have nuclear weapons, and the reason we were intervening was to deal with that issue. They were willing to take that into consideration and sort of couch their answers that way. But overall, whether you're Republican or Democrat, you do feel the pinch at the pump. You are worried about your finances. Indeed, the number one issue today for Americans is affordability, and obviously high gas prices do not help.
Yeah, wow. What'd you make of that line we started with? You're welcome. How would that test with a focus group of voters?
Yeah, people, Americans, humans in general, tend to prefer people that are gracious.
Yeah,
in general.
But does this president get a pass? They know who's coming to town.
Yeah, there's a lot of partisanship there. A lot of this is already baked in. Ultimately, Americans still are having problems making ends meet. That will be the primary issue come November. That's an issue that Democrats have an advantage on. And all these interventions are, I would say, aligned. That is, administration's interventions and messages and initiatives are aligned, but really the Democrats are in the driver's seat when it comes to affordability.
Well, security is, of course, another big issue, certainly for this president, and we can wrap it up on this because this is not great. The impact of Iran on U.S. security. This was supposed to make the world safer, right? That is the most clear objective that the president has outlined, no nuclear weapon. 41% said it made things worse. Only 26% improve. You got another 30% almost. Not much impact. That's not an imminent threat that we have just eliminated, according to most people.
Neither that, nor do you have consensus with public opinion about what this thing was specifically. And even that security, the ones that think it did help, there's the economic aspect, which they too are feeling the pinch at the pump. I would say at the end of the day, the specific actions in Iran didn't really have an impact on public opinion. You either love him or hate him. You either love Trump or hate Trump. It was really gas prices that took the bite out of the administration's numbers.
Really interesting. $4.07 today in Nevada, where he was last night. $4.95 in Arizona, where he will be later. $4.62. It's tough on the West Coast, and it's summertime too. So we'll see where these prices go. And bring you analysis with the help of Cliff Young. It's great to see you.
Great
From
to be here.
Ipsos, have a great weekend, and thank you for bringing us fresh numbers on a regular basis here on Balance of Power. He's become a regular voice for us, and always good to spend some time with Cliff. This is good stuff to think about when we come back on Monday. Let's see where the news flow is, because it might not reflect what we're talking about today. In the meantime, though, it is go time on Wall Street. We've got a more than 1,000-point rally on the Dow as we speak. The S&P 500 up 100 points, 1.5%. NASDAQ up over 400 points, more than 1.5%. Eric Weiner is watching all this from his post up in New York. Our senior editor for America's Equities joins us live right now just to walk through what we're seeing, Eric. This is pretty remarkable. And that report from Bloomberg, Kate Sullivan, we're going to try to get her on the horn in a minute here, with the president saying that Iran has agreed to suspend its nuclear program, sent the markets to new highs. Are you getting a little bit worried about the nosebleed section here?
Well, it is a huge risk-on rally. Last I checked, there were about 400 stocks that were up, and the stocks that were moving were really like the riskiest part of the market we had, or the most beaten down. Software is heading for its best week in since 25 years or something. But we're also seeing a lot in small caps. We're seeing a lot of movement in profitless tech, which is up like 20%, which is its best week ever. So, I mean, it's all kind of following oil. It's all kind of following rates. But it is this huge sort of built up relief that maybe there is an end coming to the war in Iran.
Amazing. Obviously, you just pointed it out. Oil and interest rates appear to be the drivers here. But do you worry that the market is so obsessed with trying to catch the bottom, with buying the dip? These headlines aren't even baked yet, that we could potentially give this back if the news doesn't end up sticking for the weekend.
We could end up giving back more. The concern, and I mean, look, we talked to different kinds of traders, and the concern among the, say, bears would be that it's not just that the headlines aren't baked, it's that we're responding to one side. So Trump says something, and then, about peace or about, the Strait, and we haven't heard it from Iran. We hear about Israel and Lebanon making a deal, but we don't hear from Hezbollah. So you know that if Iran sort of counters this and says we're not ready to do this, or tries to drag it on, or does anything that's different, people are going to peel off some of that. If Hezbollah decides to violate the terms of a truce that they weren't involved in because it's between the governments of Israel and Lebanon, well, then that things could fall apart too. So there seems to be what I keep hearing from the people who are kind of skeptical. That would be the best way to put them, as skeptics, is that we're responding to the upside. We are not taking into account the risk, and that leads to this big move up. And particularly in the sectors that we're seeing it move, and it does not take into account the idea that some of this may not come to fruition. A lot of this may not come to fruition, and that's going to eventually play out in prices too.
Boy, this is quite a moment. Eric, come back in our second hour. We'll see if these gains are holding up. Eric Weiner, live from New York. Thank you for the clutch analysis here. This market is absolutely taken off, thanks in part to $83 a barrel oil. That's down 12% for West Texas. And interest rates, 10-year right now at 4.22, the 2-year at 3.68. Now, I've been dropping Kate Sullivan's name all over the place since we came on the air at noon for good reason. She's partly why this rally is happening. This is the reporter who you see in here on a regular basis, White House reporter at Bloomberg, who got President Trump on the phone this morning and generated these headlines that are moving markets to new highs. Trump says Iran to suspend nuclear program won't get funds, and she's with us now, straight off the byline to your radio. I love this, by the way, Kate. We never do phoners